to know how many people own Bitcoin. Oh, that's okay. That's not bad. That's pretty good.
Like half of those that raise gold.
Okay. Yeah, that's a pretty good turnout. Okay. Well, the reason I asked that question is that I find that there are many people who don't know blockchain that well. So what we're going to try to do is really define all the terms so everybody can follow the conversation. If there's something you don't understand, I actually encourage you to just raise your hand and we'll slow down because there's a lot of terminology in the blockchain world that does not make sense to most people. So please, make sure you let us know if something doesn't make sense. Okay, so this is about China's Bitcoin crackdown and just global regulations in general. China is really, okay, China is really a fascinating example, and it's a good country to focus on because Bitcoin, the whole point of Bitcoin and just of cryptocurrency in general is this idea that no government can control it. It's decentralized, there's no central bank, there's no government. So in theory, Bitcoin can flow all over the world with no government actually being able to stop it. And so China quickly became sort of the Bitcoin center of the world until the Chinese authorities got nervous, which we're going to talk about in more detail. But what's interesting about the China case is it sort of puts all of the Bitcoin sort of mythology to the test, which is, can any one government stop Bitcoin? Because China has cracked down on Bitcoin fairly hard, and we can talk a little bit about what the results of that have been. So just to kind of put a larger framework about why this matters, not only for China, but also for this kind of the development of cryptocurrency as a whole. So why don't we start with Mitchell? So do you want to give kind of just an overview, or do you an overview of just what happened in China and let's talk a little bit about the Chinese crackdown and exactly what happened in China and crypto.
Sure. So when we first started trading Bitcoin some 4 years ago, China was 90% of the volume. And then over the course of time, it got tougher and tougher, and it was afraid that Bitcoin was being used to take money out of the country in violation of its capital controls. So it just gradually tightened and tightened, and then in September of last year, it made an outright ban on Bitcoin trading. And it forced all the Bitcoin exchanges to cease operations. And but I think currently people are skeptical that that ban is actually working. There's a new Chinese saying, I would say old Chinese saying, but it's a new Chinese saying that says you can take Bitcoin out of China, but you can't take Bitcoin out of the Chinese. Because after the ban, maybe China represented it went from 90% to 10% of global volumes, but today it's back up to 60%. And if you look at all of the top exchanges, the top 5 exchanges in the world are Chinese, followed by Korean and Japanese. So the Chinese have just moved offshore. The exchanges have just moved to Hong Kong and elsewhere, and the people have, and the money has flowed out, and China's right back on top, despite the ban.
Okay, that's a great explanation, thank you. And just again, just very quickly, for anybody here who doesn't follow, cryptocurrency exchanges are basically the points at which you can trade Bitcoin into Chinese currency. So that's what they shut down. So it's sometimes people say that China banned Bitcoin. They didn't ban Bitcoin, they sort of shut down the points at which it could be traded into hard Chinese currency. That's one thing they did. The other thing they did was ban initial coin offerings, which we could talk about in more detail. But Mitchell, I just want to ask you one more question. Can you explain, so you mentioned capital controls. So China has strict capital controls. You're not supposed to take more than $50,000 out of the country each year. In theory, Bitcoin is a pretty easy way to get around this because there's nobody really who can stop you from sending Bitcoin abroad and then getting it to changing it into another currency. So that was one of their fears. But can you tell us a little bit, what do you think were some of the other concerns? Like, why did China crack down so hard?
Well, clearly the capital control was the major thing, but it remained relatively small. But China is also very concerned about outright speculation and retail investors losing money. So you saw their crackdown on real estate when there was the real estate bubble. You saw China crack down on the stock market, great rises in the summers of 16 and 15 and 16. They cracked down on that and reduced leverage. So they're very concerned about speculation. And then the other thing they're concerned about is fraud and scams. And there were just so many, I don't know what the percentage is, but I wouldn't be surprised that 10 or 20% of all ICOs and crypto schemes were scams. And obviously they wanted to control illicit uses of Bitcoin and exchange. But I want to just...
Do you want to just quickly define ICOs just in case there's something?
Right. So an ICO is an initial coin offering, like an IPO, initial public offering. So it's a case where you have a technology company that wants to raise money, and it raises money by pre-selling its services and in the form of tokens. So you can buy these tokens to pre-buy services, and with that money they use to fund their operations. It's a peer-to-peer method of raising money between a tech company or an early stage company and a retail investor, bypassing traditional venture capitalists or centralized methods of raising money. So it really is a very interesting global phenomenon. It's a very new way of raising money, and it's raised, it hasn't caught up to VC amounts, but it's giving VCs a close run for its money. But I also want to pass on that while China was doing all this, Japan was doing just the opposite.
Yes, I was about to get to that. So this event has China in the title, but also has global in the title. So I think Japan is kind of a huge part of the story because, as Mitchell just said, China moved in one direction and Japan moved in a very different one. And this is kind of a really interesting force that's shaping the region. So Harumi, why don't you talk a little bit about Japan's position on crypto?
Yeah, sure. So how many of you know anything about the Japanese market at the moment? Not the stock market, not the bond market, but as far as crypto goes or emerging technologies go, how many of you are familiar with it? So one of the things that makes Japan unique as a whole market is that actually it's an aging population country just like any other countries, but the actual age, the total age has cliffed, right? A lot of countries' population is still going up because people are not dying, for the lack of better words, and people are still somewhat procreating. So in most of the countries, the population is still somewhat going up, but Japan, it's cliffed off because people are not procreating enough, and then older people, they really reached the end of their centurion and began to pass away. In such an environment, what do you think happens? People have to make their day-to-day operations a lot more efficient than what they used to do, right? What does that mean? Adoption of technology. So when you visit Tokyo or any other places in Japan for that matter, you feel a little bit more futuristic than you probably would in any other countries because of the use of AI. I mean, how many of you heard of the Mr. Asimov working at the bank? It's a robot that greet you, when you come into financial institutions, take care of you for the initial part. Things like that are already happening. So you can only imagine that the blockchain use is also pretty much advanced and it's very much utilized. Now, what makes Japanese market a little bit unique compared with other markets? It's somewhat moving in tandem with the US, I think you can say. Just today, the SEC has appointed the crypto chief. I think, unlike China, which completely shut down on certain aspect of the blockchain or the Bitcoin, Japan nor US are going to completely shut down anything. They will just regulate certain aspects of it. And what is happening in Japan? They already decided that this thing, cryptocurrency, is legal tender. That means it's not quite currency, but the stores can choose to accept the payment in terms of, by using the crypto.
Whereas in China, that's not legal.
Right, because they're on the shutting down side, not sort of like let's figure out how to use it side, right? So what that means in terms of asset class is that it belongs to other assets. It's from the tax purpose, it's almost like a currency. So that is where they are going, and what that means is the exchanges that Mitchell has explained earlier, on which these currencies are getting traded on, they are regulated as if those exchanges are currency exchange or commodity exchange.
So those exchanges are legitimate, whereas in China they kick them all out.
That's really the difference, right? So about half of the, prior to the big hack, if you remember in January, CoinCheck, I mean, they got a big hack, 500 million or so, give or take, and they are actually paying this money back, but that's entirely because the exchange said so, not because the government made them. I mean, there's nothing that can have the government make any of these exchanges do, unless they're properly regulated, and the government is working on that at the moment. So anyway, at that time, about half of the 30+ exchanges were already complying with the regulations that the Japanese government was pushing through. By now, most of them are complying, and then those who are not compliant are either ceasing to exist, getting out of the market, or they are still working on complying with the regulations. So sooner or later, all of those, probably it's going to be in the end, because some of the exchanges are getting kicked out or deciding to leave the country. 20-something exchanges probably in the end will be all regulated exchanges, which means when something bad happens, will there be some kind of a safety measurement placed by the government? Yes, that's what it means to be regulated. We are yet to see what's going to come out of that exactly, because right now it's just the instruction, right, coming from the government. But we probably will go down that path. So that's where it's going, which is slightly different from the U.S. because they're still debating what this thing is. And I think we're going to go to that later. So I'm not going to go. Yeah, I'm not going to go into that now. And I think I will end with that for now. But if you have any further questions or anything, I'm happy to go further into the Japanese market.
All right, we'll take a question, sure, why not?
So this,
Critical moderation.
Okay.
so this cryptocurrency is treated as a currency or commodity in Japan. How the tax?
So all that they said is this is legal tender. They never said this is a currency nor commodity. But from the tax purpose, yes, it does belong to the same asset class because legal tender technically, structurally belongs under the asset class, which currency also belongs to. So what it means, I mean, basically, I mean, this is actually, as far as tax goes, globally, it is a pretty straightforward thing. Just about every country's, except for the China, of course, has agreed that if you make money on anything that you trade, you pay money on it. That's pretty much the straight stance all across the world. I mean, there are some variations to how that calculation happens, of course, but the tax is the easiest formula, easiest part of this formula to answer your question. So that's also how it's dealt with.
The one exception with Japan, as far as I understand, though, is that they don't allow for capital gains exception on crypto taxes, as far as I know, which is different from the U.S. So, you know, in the U.S., if you hold your crypto for like a year, you can count it as capital gains. In Japan, you can't. So it's always taxed as income, which makes it quite high. So a lot of Japanese people are complaining about that.
So we trade in Japan, and we just file the tax returns, and definitely you have to pay your taxes if you make money trading in Japan. But they do have an exemption from consumption tax or VAT tax. If you're trading in Japan, you don't have to pay VAT tax.
And one thing just quickly to add on the Japan point, it was a really good summary, is you know, one of the things Japan has also done, in addition to kind of making things legal, is that they've made things clear, right? So that's a huge difference from a lot of different countries, is that in Japan, there are, I think right now, 16 licensed exchanges. So it's kind of like, these exchanges are licensed, these exchanges are not licensed. They also have a list of what coins are acceptable. There's a white list of tokens or coins. So it's like, these coins are legal, these coins are not legal. And so I think because there's so many gray areas in crypto, Japan has become an attractive destination for people who are like, I want to do things legally and I don't want to accidentally break a rule or accidentally go to jail. So, and also, you know, Japan is now attracting a lot of Chinese crypto entrepreneurs. Like I see them, we have an office in Japan and it's full of, you know, Chinese entrepreneurs because of that reason.
Well, you prefer, I mean, you have an office in China, you have an office in Japan, but your main operations are in Japan, right?
We did our main launch in Japan, in Tokyo, and I think, yeah, we're centering a lot of our energy on Tokyo for that exact reason, because it's like clear and it's legal and it's a better environment than a lot of other countries.
So the funny thing that is happening right now, as Emily said, on one side, it's really good to have regulations and you know what you're dealing with, you know what you cannot do, you know what you're allowed to do. On the other hand, the funny thing, the interesting thing that is happening is because it's regulated and it's not regulated in many other countries, those companies that don't want to be regulated, right? Exchanges that wanna that want to offer the service without the regulation framework around them actually have either decided to leave the country or the government nicely asked them to.
Like
leave the
Binance.
country, one or the other.
Yeah,
right?
it's like Binance, yeah.
So that is a dilemma that the Japanese market is having right now. If depending on who you ask, people, the companies that are going to operate in Japan, right? I mean, utilizing the tokens or utilizing the framework, they really like Japan because of that. The companies that want to kind of take benefit out of the sort of like the whole blockchain, Bitcoin, cryptocurrency world, some of them decide to leave because they don't like the
That's
regulation.
really
So
good,
yeah, it really depends on which side of the borderline you're.
And also Japan has become, but let's get San Francisco's conversation.
Yeah.
But yeah, that's, I really like that point though, let's come back to it in a little bit. So why don't you talk to us a little bit about the project side, right? Because we're talking about, you know, all these regulations and how they're changing in all these different countries, and so how does that affect somebody who's kind of, and you know, if you can describe your project, again, very, very simply, so anyone can
Sure.
understand, and just kind of how this kind of shifting regulatory environment
Yeah.
affects you.
For sure, yeah. A lot of things that Mitchell as well as Harumi had touched on. I think we are looking at things like that very closely to know how we can how we can operate ourselves. So I guess as an introduction, Emily had talked about centralized exchanges being the central point where you can exchange your US dollars or renminbi for cryptocurrency. We are a little bit different in that we do crypto to crypto. So if you bought some cryptocurrency off of the likes of Coinbase or the likes of Kraken, for instance, then you can take that bought currency or cryptocurrency, the Ethereum, the Bitcoin, and then use our platform to exchange for something else. So for instance, you can exchange it for some other token that exists on the Ethereum blockchain. For instance, our token is called AST, so you can do that, you can use Ethereum to exchange for some AST using our platform. And we do it in a decentralized way. It's a little difficult to describe exactly why that is beneficial in just one sentence, but broadly speaking, so in crypto to crypto exchanges, there are centralized exchanges as well as decentralized platforms. Centralized exchanges are a little bit more central, so if there are certain failing points, there are more failing points compared to decentralized exchanges. And so we are, I'd say, the next generation of exchanges for cryptocurrency. And why we're looking at the regulations very closely is because, as Mitchell and Harumi have touched on, different countries have their own laws. And we try to abide by those laws so that we can actually operate under those laws. It's very difficult, for instance, in the US, because laws are not written yet, are not clear for us, so we don't really know what we can do. A lot of things we want to do are like marketing related, we want to contribute back to the community, but we don't know if we can do that or not, because if the SEC comes back and say that our token, the AST token, is a security, then that means our entire business model has to change, right? So there's a lot of things that the regulations can do that will affect us as a project. And us as a project, we're looking at jurisdictions like Japan, like Hong Kong. We are actually, in fact, incorporated in Hong Kong. We're also looking at Singapore. We're also looking at Korea.
But not China.
But not China. No, not yet. In fact, Mitchell had talked about ICO. We did our ICO back in October of last year, and it was right after the ban on ICO in China, and so we effectively banned everybody from China in participating in our ICO. But later we found out that there were a significant portion of that purchaser came from Philippines, and upon doing more research and analyses, then we found out that those were actually Chinese buyers using VPN to get around the Great Wall to purchase or participate in our ICO.
So between you, between Emily and you, I mean, you've both given examples of why you decided to avoid China. In one case, go to Singapore or Hong Kong. In another case, Emily, you were going to Japan. And it really bothers me because I'm Chinese, I like China, I love China. And it bothers me that there's a brain drain and a capital flow out of China because of their ban on crypto. On the other hand, China is great in other technologies. I mean, they're the leaders in electric cars, in solar production, in AI, machine learning. I mean, in many technologies, and the country has targeted 10 major technologies. And it hurts me that they're falling way behind on blockchain technology, which I think is right up there.
Well, this is actually an interesting point because China kind of wants the blockchain without Bitcoin,
Right.
right? So which is a common thing that
And you can't do that because,
well, you think they can, they
Well,
think
I-
you do it.
I don't think you can do it because you can't run, say, blockchain without Bitcoin. You can't run Ethereum without Ether. I mean, these blockchains run on operators and miners, and they're not going to do this for free. They need an incentive. So the Ethereum network needs Ether to pay the operators. The blockchain needs Bitcoin to pay the miners.
Yeah,
So you can't have your cake and eat it too.
Yeah. I just want to add on to Mitchell's point in that we have been invited over to China to speak a lot, and upon them finding out that we are a trading platform, they actually told us not to come because it's a very sensitive topic, whether it's in Beijing or in Shanghai.
And also, yeah, sorry.
No, it's just very unfortunate that this
It's
happens.
a huge brain drain.
Yeah, and then a weird thing that is happening is I attend a lot of like fintech competition and pitching events and things like that. Nowadays, you see a lot of PowerPoint presentation that has the last slide. This is for the investors outside the U.S. and China. Just as a
Well,
disclaimer,
right, they
so
put the
that-
US
Yeah, because I mean, you can't.
We're like number
yeah.
2 of the people I want to be. Which we'll get to in a
At
second.
some point, we should talk about U.S.
Yeah, we'll talk to the
regulation.
US, but one counterpoint to the China thing, though, I will say that like pretty much every Chinese blockchain entrepreneur I've spoken to, I mean, and the people who are most affected by this, think that the ICO ban was a good idea. So I actually, I feel like that's been my, and the reason for that is because, Chinese ICOs were kind of out of control. So ICOs, Mitchell described it very, very clearly, but you basically, it's like fundraising from the public with like, right now, very little regulation. So it's like, Anyway.
You could have progressive regulation that encourages the good and discourages the bad.
Sure.
So, for example, we'll go to the U.S., the SEC, the CFTC, they recognize how the internet in the United States was a transformative, disruptive technology, and they want to follow that model of encouraging the technology, but discouraging all the illicit uses. And balanced progressive regulation can do both.
Yeah, I totally agree. And again, this is not my point of view. This is just one that I've heard a lot in China. Is that on the ICO front? First of all, China is not the U.S., right? So you kind of had there's a very different environment there, and the ICO craze was legitimately out of control. People were basically pouring their savings into like really crazy projects, and part of this has to do with various aspects of the way China is structured. There weren't a lot of other investment opportunities, so there's a lot of reasons for that. So again, the question is this ICO ban permanent, or is China just doing what China does, which is like put on the brakes while they figure out what to do? So I think some people think it's the latter, and that's why they're not opposed to it.
I do have, this is something that I want all of you to think about, right, while we are talking about ICOs. So I'm obviously sitting up here believing in the democratization of fundraising, right, by going through the public fundraising like ICO. But at the same time, do you know what actually, like the ICO sort of buyers actually have to understand the business? In most cases, they have the white paper, nothing but the white paper, which means the business model is not 100% clear. Most of the companies, if not all of the companies, don't even have the technology quite ready. They are raising this in order to get the operations, sort of like the money, the operating income, in order to get the technology ready. So I do think that while such strong regulation is not called for in some countries, I think that it is a good place for us to think of what it really means for us to invest into ICO. What do we need going forward? What do we need to build as a practice, not the regulations, but as a practice going forward, so that the investors actually can have fair amount of information and not like very much one-sided white paper, looks good, let's invest into this kind of mistake that a lot of people make. But the truth out there is that there are a lot of fraud, and we might be touching upon this. I'm not going to go into deep into that just yet. But the fact of the matter is there are a lot of fraud cases out there. And then there was actually one ICO that was actually got shut down by SEC just last week because of the fraud that was discovered officially. but there are a lot of them out there, so.
My
yeah.
favorite ICO story was when the SEC crackdown an ICO that was supposedly backed by diamonds, and then they were like, there's no diamonds. Like, it's kind of like the perfect ICO, so like someone said there was diamonds.
The funniest SEC story I heard was the SEC created their own ICO.
Oh, yeah.
The Hwang
That's
token.
fine, yeah.
The Hwang is a name, it comes from Hwang test, which is a test for whether or not if something is a security or not a security. So they created this, the SEC created this fake website to see how much money they could raise, and they, I don't know, they raised,
it was pretty
they
awesome.
raised some money.
And
Just to prove to the public
the part of
that
the
it's so
test,
easy to have a
yeah,
scam.
the part of that test was like not how many people actually clicked not just about on the coin link itself, but also like disclaimer links and everything like that. And there is nobody actually went into the disclaimer, which tells them right at the beginning that this is not a real coin. Don't try to buy them. Most, if not all of the people, if I'm not mistaken, actually didn't click on that disclaimer. So that's how easy it is to trick the market right now. And we feel responsible to continue educating and talking about the fact that not all the ICOs out there are good ones, and we need to be aware of that. So I just wanted to bring that point up, yeah.
Yeah, and also, I think what's interesting is what gets lost. I'm just curious, how many people have like a primarily negative impression of ICOs? Please show of hand. Okay, actually, I guess this is like a crypto event, so. But I'd say like now, it seems like it's a very negative, negative impression of ICOs because they're seen as scams and diamond companies that have no diamonds and that kind of thing. But, ICOs, as you mentioned briefly, like they can be a kind of revolutionized fundraising, especially in a country like Japan, actually. I think Japan's a really interesting case because in Japan, and you know this better than I, but like it's not terribly easy for a small startup to raise venture capital, right? There's not a lot of risk capital floating around. So ICOs, in theory, could be quite good for these tiny little startups that want to raise money from the public and are not going to get to the point where they're going to get VC money. So it can have a positive effect. There's just, it's the question of like clearing out all the fraud first.
And not only that, but also because we have a fair number of, for example, women in the audience today. In the traditional venture capital world, only about 13% of the female founder companies get funded. In the ICO world, since when ICO started, and in the sort of like this kind of public sort of capital raising world, that number all of a sudden jumps to 44%. So that really like you start asking yourself a question: is the venture capital, like when you go out and raise the funds, is it really merit based, or there's some kind of bias built into the process, right? And then things like ICO really takes certain things out of the equation, which we really have to value. So we have to try to find a way to get the bad ones out, keep the good ones in somehow, and we need to really make this work. So I mean, I did say a little bit of the negative things earlier, just so that you start thinking about it, but this is a really positive thing that is happening in the venture world. So we really need to embrace it and make sure that we can figure out together how we're going to make this work.
Stanford, do you have any thoughts about like what kind of, let me just get you involved real quick, because do you have any thoughts about like what are good ICO regulations? Like how do you regulate this space? Because there's clearly, people often ask like, do you like regulations for crypto? But that's not the right question, right? It's like, what are the good regulations and what are the bad regulations? So what do you think, like, how do you regulate the ICO space?
I'll indirectly answer that in that you don't necessarily have to rely on the government for regulations. A lot of the companies actually get together and form together what's called self-regulated organization, SROs, across many countries. So for instance, in Japan and Korea and in Taiwan, a lot of these different countries have formed, the blockchain companies have formed together their own sort of organization that define certain things to be better than other ways of doing ICO. So for instance, in New York, there's a project called Brooklyn Project by consensus, and what they do is they try to define the tokens that people can do ICO. So they break it down in terms of consumer tokens, security tokens, and then investor tokens. So a lot of these people are actually coming out, presenting their own ideas to the public, and have a community effort coming together to create a regulation. So it's really not a regulation by the government, it's really regulations that's formed by people who are very enthusiastic about this space. So I think that can certainly help out. The regulators really have to get into the space to understand exactly what we're trying to do. Not a lot of people, not many projects are good projects, and they just have to. We welcome conversations with them. We want to talk to them, help them understand a little bit better of this space and what sort of transformative technology that we can bring to the society.
Okay, great, and we have a question in the front.
Great, thank you very much. So currently, as far as I know, there are two types of tokens. First type is called the security tokens. The second type is called the utility tokens. In terms of the SEC, chances are they're going to regulate the security tokens. With the utility tokens, there are a lot of question marks. Do you think that the SEC will allow utility tokens? If yes or no, why or why not?
Okay, that's a great question. Wait, can I just stop, literally just moderate for 1 second? It's a good question. Before we answer that, that's a great question. Let's actually talk a little bit about the US, because you're kind of jumping a few steps past where we are. We haven't really talked about the US at all. So I don't know if you want to kind of just explain what's going on in the US regulation-wise, because it's a little bit confusing. And then let's also just describe what a security and utility token is, because I'm not sure everybody will.
Okay, so even before I talk about security token versus utility token, first of all, why such a discussion is ongoing, right? First of all, how many of you heard of the Howey test? Okay, so this is a law that was set back in the 60s. And ever since, there are 5, 6, 7 checklists on that sort of regulation in that law. If everything passes, it's said to be this asset is a security, right? So for last year or so, everybody's looking at this thing, right, cryptocurrency, and saying, we think that this passes the Howey test. So I think that we are security, and the SEC definitely stands on. The reason they want to make, SEC wants to make this into security, don't tell them that I said this, but it's because these regulatory bodies, when they get a new asset class, they get fresh budget. So this is actually their real sort of living and breathing problem when they talk about, they look at the new asset class. And that's why SEC is saying that this is security, and then the CFTC, the commodities exchange, commodities regulators are saying, no. We have Bitcoin futures, this is a commodity, we think that this is a commodity, and then that battle has been ongoing. So, aside from that, yeah.
On the SEC, the current chairman, Clayton, says, and this is a quote, "I've not seen an ICO that I don't think is not a security." So he's planning to regulate every ICO, whether it's a security token or a utility token. Every ICO, because of the fact that they raise money from the public, makes them subject to SEC regulation. So he's going to regulate every ICO.
Can you try to explain very simply though, just security versus utility? I know there's a test for it, but just what is, if you just in 2 sentences,
Sure.
How would you define it?
As I was saying earlier, a utility token is pre-selling your services versus a security token, you're giving economics to the owner, to the buyer. So one analogy would be if you're building a golf course and you're selling golf memberships, that's a utility token.
Because you can use it within the golf course.
Because you're prepaying the right to play golf. If you are putting up money in a golf course to get the revenues from the equity investment, that's a security. So one, you get economics. The other one, you're prepaying services or the products. And that's the difference between a security and a utility. So what the SEC is saying is that forget that. The fact that you're raising money from the public makes it a regulated security.
Well, also the idea is that isn't part of the logic that if you think that the value is going to go up, it's automatically a security? Isn't that part of the...
That's
and also the fact that they are flipping it on some exchange immediately, that makes it really security. And then, so I didn't want to necessarily go into sort of advisement-ish sort of discussion or anything like that, but the fact that everybody, remember I said earlier that most of these ICOs, if not all the ICOs, are coming out 12 months to 18 months ahead of the technology being ready. What does that really mean? Even if the owner of the company has a genuine intention that this is going to be a utility to utilize the service by using the token, none of the investors are going to come in and holding on to the token that they can't use for 18 months. They're going to go to the exchange, flip it. That has a very much of a security characteristic, and that's why the SEC, right, is saying that this is security.
What is your intent
Exactly.
of investing or buying? Is your intent to make money? Then that's one of the tests of it
Right.
being a security.
Or is this token actually going to be used within the platform? Like if you say for example, it's like a social media platform, right? And you're selling tokens, and the idea is that like you can use this token to tip writers, or you can use the token to, you can basically use it within the platform. So that would be more of a utility token, and that's but a lot of these projects. Some people argue that the token is literally just a fundraising mechanism. You can't actually use the token for anything.
And because of that, where the SEC and the CFTC and all other regulators are going is that they're pretty much coming to a conclusion, although nothing has been written yet, like Stamford said earlier, but they're slowly coming to a conclusion. We probably will be hearing about it in the next few months, or at least within a year, at most within a year, that this is a security. You heard this from me first, so don't go out and say that Harumi said so. We think that it's going to be security. But where the discussion is moving now is not so much about if this is a security or this is a token, but, okay, so let's say this is a security. But what is this going to be in 12 months' time? What is this going to be in 18 months from now? That's where the discussion really is beginning to move to, because then, all of a sudden, what are we talking about? We thought that we bought a security. 18 months from now, it's going to become a token. I mean, a company like AirSwaps, like Stamford company, and they think that they're issuing the security, and in 18 months from now, SEC is going to come out and tell them that, by the way, from this day onwards, it's not security. That's a problem.
It has big implications for exchanges too, like Sanford's, because if the SEC regulates these tokens as securities, then the exchanges that trade them are also going to need to be regulated. So Sanford's exchange and all the other exchanges which are currently unregulated will have to be regulated, like being NASDAQ or the New York Stock Exchange or the Hong Kong Exchange, which has huge implications for the exchanges.
Now, I think I can make a simple comparison between the U.S. sort of regulatory framework to someone like Singapore, and that the U.S. has so many different agencies. They have the SEC, they have the CFTC, they have FINRA, they have money circulation, all that. But if you look at, and they are all trying to come together to agree on one thing so that everybody knows kind of whether Bitcoin is a commodity, whether Bitcoin is a security or something like that. But if you look at Singapore, Singapore has everything under one roof. So it's very easy for them to come to a conclusion. In fact, they've come to certain conclusions that would ease up regulation for exchanges. And so they have positioned themselves very good for exchanges or upcoming exchanges so that they can benefit from that. And that kind of goes to Mitchell's point about brain drain, because if a company like ours sees something like that that's very beneficial for our operation, we would definitely move over there and operate our platform out of Singapore. So
yeah, that's just quickly. I want to kind of like sort of dumb this down for a second. If we have like kind of a spectrum of friendly versus unfriendly, and you have like China being pretty unfriendly, and Japan and Singapore being friendly, like where is the U.S.? Like is the U.S. friendly? Is it unfriendly? Does nobody know?
It's in the middle.
Yeah.
I would say China is the least friendly, Japan is the most friendly, and U.S. and Korea are in between. But this has...
Well, Korea is more like, they're like super unfriendly, but they're like, okay.
But coming back to China, what does all this mean to China? It means that they're missing out on a huge technology development. They're the leaders in solar, they're the leaders in electric vehicles, many things. But I don't know if I put them in last place. But they have the brains, they have the talent, but that's all leaving the country.
But that's kind of an argument for why, this might not be permanent on the Chinese side, because the Chinese government is pragmatic, right? And they're probably aware of that. And, the question is like, will that ultimately make them change their policies on crypto over the long term? I mean, I don't know, but...
Can you pause for a second on those
Sure.
comments you were just making, just to explain why is it such a huge technology? Why is it important that China or the United States or whatever country develops this technology? How is it going to change the world? Like moving away from Bitcoin for a second, why is blockchain so important?
I can, oh, go ahead.
Okay, so it's really interesting because one of the most basic things about human society is that humans need to have titles. You have to have title first in order to make transaction later. So you have, a lot of times, you compare the Western world to the Eastern world, and that the Western world is a little bit more advanced because they have this sort of title registration in place so that you are able to tell someone else that you actually own this piece of land. And that's something that's sort of been going on back and forth in the eastern part of the world. And blockchain allows for anybody to put this title onto it becomes a source of truth. So you're able to put your title on certain properties onto a blockchain that anybody can see, that anybody can verify. And I think that allows for a lot of the people who are not currently banked to become banked. So they can have access to certain things that they would otherwise wouldn't have under the current regimes in a lot of different countries.
So in more general terms, one killer app for blockchain is its method of record keeping. So your application is record keeping applied to title. Record keeping could be applied to equities in the stock market. It could be applied to banking, money transactions in banking. It could apply to healthcare and medical records. It could apply to almost every kind of record keeping. So every country, every company, every industry in the world has to be thinking about how can they use the blockchain to transform their method of record keeping so that instead of the ancient methods used by the stock exchanges, they can have something that's much faster, better, cheaper that will transform all record keeping on all stock exchanges. But that's just one example. Think about medical records. Think about real estate title. Think about the title of anything in the world. So it's going to have a huge, huge impact. And if China is missing out on this, it's like missing out on any of the other great technologies that they're promoting.
I'm gonna bring this down even one more level, just in case someone really doesn't follow this. So just to define terms here, blockchain most famously is the record of Bitcoin transactions. So it's a decentralized ledger that is not controlled by any central.
Dumbing down one more thing, it's like an Excel spreadsheet.
Okay, fine. It's like an Excel spreadsheet that is not controlled by any one central party, which means that nobody can shut it down. And why this is so revolutionary is that it is allowing huge volumes of money to travel all over the world without any bank or without any central government. And when people talk about blockchain, they talk a lot about trust. So the idea is that blockchain is so trustworthy because it's basically there's a lot of technical reasons for this, but the idea is that because it's decentralized, because it's relatively transparent, it's very difficult, it's impossible to change without somebody else noticing. And so this has become a way to keep track of billions of dollars without a middleman, basically.
Without a bank.
Without a bank. So this is how people are trying to use blockchain in all these different industries. It's like, how can we cut out the middleman in any industry, right? How can we, for example, give someone a loan without someone having to verify it? So this is kind of on the even. Sorry, did you have a question?
I didn't mean to interrupt you when you're ready. Yeah.
Oh, sure, go ahead.
Oh, sorry. I was just raising my hand because I was going back to the very basic fundamental thing. I follow social media in China, and I hear this what you're going on, and I wanted to understand two things.
Sure.
Back to the basic level. What's the correlation you said between the cryptocurrency and the blockchain? And when you hear the voice of the government in China, it seems to be they present it as an effort to undermine the legitimacy of government's control and safeguarding citizens. So that's the question is, what's the value add? And is it merely a way for bad guys to have access without the scrutiny of government to control them?
Okay,
I'll take the first one.
Okay, yeah, can someone actually, Mitchell or Harumi, whoever wants to, can someone actually explain very simply, because you brought this up earlier, why does blockchain need Bitcoin? Because this is kind of, because this is kind of your question, why do we need crypto at all? Why can't we just have a database? So what is the point of the cryptocurrency?
So email or HTML is to email as blockchain is to Bitcoin. Okay, so basically Blockchain is the underlying technology that enables Bitcoin. So
But why do we need Bitcoin at all?
Yes.
Why
Because
do we-
what's the value of something? You've described the value as being it's outside the system. Therefore, no single government can regulate or control
that's
it, and
the
that's its
beauty of it.
intrinsic value.
So there are some of us who don't want the government. They just want a decentralized system where people just interact without a central authority. And that's the beauty.
Which is why governments don't like it.
Governments don't like it because it's competition.
But you have to look also at the history of Bitcoin, which basically came into the world on the heels of the US financial crisis, when people didn't trust the government or banks to do the right thing. And so that's really in the fundamental ideology of Bitcoin. And I think, again, coming from a US perspective, it's like you might not feel right now that you need something outside of the government control, but during the financial crisis, definitely people saw things differently.
And if you live in Zimbabwe or you live in Venezuela, where there's a failing government, cryptocurrency, Bitcoin, is much more favorable than having your government control the money. Or if in the case of a weak banking system, or where there are people who are unbanked, who don't have access to banks, a decentralized system where you're just dealing me to you without a bank.
The banked and unbanked has many, many other answers. China will tell you WeChat can help the unbanked in much the same way
I'm
that...
not saying that Bitcoin is the only payment system. WeChat Pay, Alipay are obviously outstanding methods of payment. And there are many payment systems that compete with Bitcoin, but Bitcoin is a concept that first promoted the idea of decentralized payments.
Yeah. And this is, anyway, do you want to say something?
No, I mean, it's okay.
Yeah.
Let's go to the next question. Yeah.
Can you discuss the consensus mechanism on the Bitcoin platform?
Yeah, actually, thank you. I actually would like somebody to discuss, this isn't easy to do, but just break down, again, very simply, like how this works, and, again, why do we need Bitcoin, why do we need crypto at all? So that's part of the consensus. Do you want to explain that?
Yeah, sure. So Bitcoin operates based on what's called proof of work. What that means is people, like Mitchell talked about before, on the Bitcoin blockchain, there has to be miners that order the transaction or put together the transaction and then form together as a block and then put it onto the blockchain. So that's why it's called a blockchain. And for miners to actually put these things onto the blockchain, they have to come together as a group. They have to form more than 51% of the group in order to validate that transaction. And that's why it's so hard to attack it, because you need the 51% of all of the miners to come together to agree on that source of truth to be able to put onto the blockchain. And given by how decentralized the Bitcoin blockchain is, it will become very cost ineffective to gather up more than 51% of the group of miners to be able to change the source of truth.
And miners are receiving Bitcoin as a reward for their work, right? So this is what Mitchell talked about when he talked about the incentive system. It's like, that's what keeps the Bitcoin blockchain decentralized, is the fact that you have so many people that are incentivized to verify it. And they're incentivized by a financial reward, not just by volunteer work. So that's the difference between just having kind of like a database and having the Bitcoin blockchain. So that's kind of...
So if the block is so impossible to change, how come exchanges get hacked and coins all of a sudden disappear?
So hacking is, Bitcoin can't be changed, but you can go and steal Bitcoin, and then stealing Bitcoin is like stealing art. You can't resell it because it has a unique serial number or unique identification. And once it's stolen, the exchange or the owners that held it publish those numbers. And if any of that comes up again, it's hot. It's hot. And theoretically, you're not allowed to use it. But you bring up a point that Stanford brought up earlier, the benefit of decentralized exchanges. You can't get hacked. The exchange can't get hacked because they're not holding your Bitcoin or your cryptocurrency. In a centralized exchange, you're giving that Bitcoin to the exchange to hold, and therefore it becomes a honeypot. It's a target for hackers. Whereas in an exchange like Stamford's, which is a decentralized exchange, you hold it, you're trading, I'm trading with you, but he never touches it. So the exchange can't get hacked in his case.
Also, in the past 10 years, the Bitcoin blockchain has never been hacked. The blockchain itself has never been hacked. What's being hacked are the exchanges, which are completely different from the actual blockchain. So that's kind of an important distinction.
So if my coins get stolen, and those coins can't get used again because it's registered, how come those people can't just get their coins back? They just disagree. So at the end of the day, the person who has his money or his coins taken doesn't get them back. They've lost a lot of money, whether or not those coins.
Right. So I'll use an example that Harumi mentioned, CoinCheck. CoinCheck in April this year had $500 million of a coin called NEM stolen. That got the regulators very concerned about all their exchanges and did a lot of deep investigation. In that case of CoinCheck, it had sufficient balance sheet that it repaid all the users in Japanese yen, but that coin was gone. It was marked, and right now there's an investigation of another exchange called Xife, where although it was marked and all the exchanges were told, watch out for these coins, it's alleged that Xife allowed some of that hot coin to be resold.
So as all these different currencies get inflated in value, I mean Bitcoin's fallen a bit, but wouldn't that incentivize hackers to come in and take coins to hack exchanges to whatever? Because it's kind of like you say, you know, if a Monet gets stolen off a wall, you can't resell it, but it goes up in your wall at home, you can look at it all day.
You can't look at it.
There's a whole lot more to steal if you hack an exchange than if you go down to the bank and steal what's in your vault. You know what I mean?
I guess the hackers are optimistic that someday they could sell it, or maybe they get make a deal and say, look, you know, protect me, I'll give it back, and you know, just give me 1%. I don't know what's in their minds, but there was another
But
case.
there are ways that they can exchange it for. I mean,
Well,
there are ways that they can
they're
exchange it for currency. For
They're
sure.
illegal ways because again.
Well, hacking is illegal. They're not worried about that.
No, but in the case of recovering the Mt. Gox coins that were stolen, again, who was it, the IRS, the SEC, somebody, no, it was the FBI, shut down an exchange called BTCE, again, because it is alleged that some of the Mt. Gox marked coins went through BTCE in exchange in Bulgaria. So maybe they're hopeful that maybe they can get some of it through.
Yes, please.
I have a question about the regulatory atmosphere in Japan. And how deep does that regulation go? Is it just for taxing profit, or are they actually doing what we do here and going and auditing, making sure that it's a valid premise and that the team is doing what they're saying?
So they are regulating the exchanges. It's definitely beyond like what gets taxed and what doesn't, but rather what kind of what kind of regulations each exchange has to comply. And some of them, I mean, I read not all of the bullet points because I have never had a chance to read the whole Japanese document, but I've seen some of the bullet points of what the exchanges have to comply. And one of the interesting bullet points that I found was all these exchanges, right? I mean, exchanges are financial service provider. Yet a lot of these like blockchain-related companies now are started by the technology people, run by the technology people, do not have any finance experts. And that's one of several things that the Japanese regulators are looking for. And some of the exchanges that did not have any financial service background people as a part of the management team actually got punished for that one. I mean, that's not only the reason, but that was one of the things that they were definitely looking for. So it definitely goes much deeper, and there are definitely some of the clear points that the each exchange has to follow. I mean, is it gonna go to anything really serious beyond one is regulated and the other one is not regulated? If they will remain not regulated, eventually they will be asked to leave from the Japanese market, or they will kind of self take them out of the Japanese market because they don't want to deal with the regulations. We don't know because it's so new. It's being really sort of seriously looked at only since January. Regulations have been in place since before. That's why 16 exchanges already complied. But that's when this thing really sort of came out into the limelight, and everybody's really looking at what exchange needs to do.
Yeah, there is an extensive audit, and there's a lot of boxes to check off, and especially since CoinCheck, I've definitely heard a lot of Japanese exchanges complaining that they're getting constant visits and calls, and that it's actually gotten a little bit too much.
Well, one thing about Japanese regulations, I agree that it's deep, it's only 2 years old, but it's very, very deep. It's like regulating a stock exchange. But there's one flaw, which is when we do due diligence, when we put our money on a Japanese exchange or any exchange, we ask for financial statements and we look to see if their balance sheet is sufficient to take a loss. So if they get hacked, do they have a sufficient balance sheet to make up customer losses? And in the case of Japanese exchanges, that's one part that's very weak right now. Their amount of reserves is almost nothing compared to the way they regulate Japanese banks.
Are you, when you look at those financial statements, is it denominated in yen
Of
or?
course, I mean, it's Japan, right? So
Well, I mean, but what if it's
denominated in
what-
crypto.
Yeah, in Ethereum
No,
or?
no, they regulate it. I mean, it's denominated in yen. But a lot of the exchanges, their assets are in crypto. And that's one of the things why CoinCheck was able to have sufficient balance sheet, because they were very early users and owners of Bitcoin and other alternative currencies. So fortunately, that all went way up and they were able to cover $500 million of losses. And then they sold themselves.
Yeah, Rita?
Yes, I teach international finance to designers, and we've seen Burberry jackets that have been purchased with Bitcoins. Not through the brands themselves, but through third-party sellers. So when do you see this as becoming a mainstream, and what needs to happen so that it becomes mainstream?
I think it takes regulations in part to be mainstream, that governments recognize it as a legitimate method of payment and regulate the industry. That's one thing. But the more important thing is that it's got to be easy to use. It's got to be easier, I mean, as easy to use as Alipay and WeChat Pay. Otherwise, it can't compete as a payment system.
Just before we take one question, I just want to get back to China for 1 second, since that's ostensibly the theme. So you talked early on about how, there's still a lot of trade happening in China. Can you talk a little bit about how are people in China basically getting around these restrictions?
Well, first, the exchanges are all have moved out of China and reincorporating in Hong Kong, Singapore, etc. And then in terms of the crypto millionaires and wealthy people have made a lot of money in crypto, they moved their money out of China in the form of crypto a while ago. I think most of that money is no longer in China.
The 60% number you mentioned earlier, what is that referring to?
Total volume of daily Bitcoin traded from China.
How can you
of the world.
How can you even measure that, though?
It's very easy to measure. You go to a website called coinmarketcap.com, and it has the daily volume updated minute to minute of every exchange in the world.
So, but you're not talking about exchanges within China, you're talking about Chinese exchanges outside of China?
I'm talking about all exchanges in the world.
Right.
So there are close to 200 of them.
Right.
And if you look at the top 10, 6 of them are from China, 2 from Japan, 2 from Korea.
Right, but they're not operating in China right now.
No.
Okay, yeah, I just wanted to clarify that. Yeah.
Well, when I say Chinese exchanges, before the Chinese ban, they were incorporated and they ran in China.
Right.
When the ban came about, they legally reincorporated or created a new company in Hong Kong and established themselves in Hong Kong. But all of the people, all the staff, the customer service, the operations, accounting, are still in Beijing and Shanghai.
But what we don't know though is what percentage of their customers are in China.
Well, I asked them because I have to do, in order to trade there and give them my assets, I have to do my due diligence. So I asked them, and typically, they say over half of our customers are Chinese.
Okay, and so can you explain how the Chinese actually trade from China, given that they've kind of shut down these points?
Well, they know ways to, you use VPNs, you get around the Great Firewall, and
Well, but it's not just about VPNs, it's about actually, I mean, if you're a new customer, right? and you
yeah,
only
I
have
don't
Chinese-
think these are new customers.
Yeah.
No, but from what I understand, Mitchell, and maybe, correct me if I'm wrong, what they do in order to, one of the ways to get around it is they invest first into something that they are allowed to invest. Let's say property in Japan, right? They bring out the money out of China that way, and once it's there, then it gets converted to cryptocurrency. That's definitely one way to get around, and they're not doing anything illegal. I mean, it might be a little bit gray, but they are investing into something that they are allowed to start with, and then once it's out, it becomes something else.
You talk about the Philippines,
yeah.
Yeah, so, so the Philippines, that was definitely a VPN, but a lot of the Chinese sort of traders, what they do is they get on Telegram. So Telegram is this thing, a new sort of chat room that any blockchain project would have a chat room that's dedicated to their community. And a lot of the users, or a lot of the traders, they get on these Telegrams and they find counterparties to trade with. So they don't necessarily trade, they don't have to trade on an exchange, they could find people that way.
Yeah.
Because all you have to do really is just ask for an Ethereum address or a Bitcoin address, and then you put it, and then you just put it as a recipient, and you send the Bitcoin or the Ethereum to that address. And then you can see and you can identify all that information about that specific address on the Ethereum blockchain. So if the person tells you that, oh, I have this much Bitcoin in my address, you can easily verify that. Or Ethereum, you can easily verify that. For Ethereum, you can find it on etherscan.io. All you have to do is just put in that address, and then it will show you the entire transaction that's ever involved that particular address. So that is Bitcoin, or sorry, not Bitcoin, the blockchain is the source of truth that allows you to find out whether someone is telling you the truth or not. And through that way, people can make trades safely via chat rooms.
Yeah, I mean, I think the way to simply sum up the Chinese situation is that they haven't made it impossible, they've just made it really difficult, right? So that kind of
And the Chinese always find a way to.
Well, right, China, right, but they've accomplished their goal in the sense that, like, you just said these aren't a lot of new customers, right? So what China wanted to do was sort of like get the masses out of this, right? So, they want to make it hard enough that there's like a threshold, to trading or to entering the market, right? Like, oh, I just have a bunch of.
I don't know if they completely stopped.
Not stopped, but made it harder, yeah. Okay, sorry, some questions. Who has not asked a question yet, so make sure, yes, please.
So I think one of the things that's driving regulation here in the US is interest by institutional investors in tokens and also blockchain technology. We have a lot of new venture capitalist funds coming up. There are also hedge funds that are interested in this space. I don't know much about China and the investment community in China, but to the extent that there is one, how do they approach the government and say, why don't you make this easier for us? We think that this is an opportunity for us.
Well, there are hundreds of new crypto funds, and they're definitely Chinese as well. I don't know. I think that most people are afraid of going to the government, and the Chinese are afraid of going to the government and lobbying in favor, because then they get labeled. For example, just a practical example, I was asking some friends to be a part of this panel, and a lot of them said, oh no, I can't speak against the Chinese government, I can't be on a public panel. So it's kind of taboo.
Yeah, we forget that we are actually living in a great country where we are allowed to actually criticize all the way up to the president and nothing happens to you, right? Whereas, there are a lot of countries where you get really sanctioned. And it's a really different matter. So regulation, what you do with it, or what you can do with it, is very different from a country to country. We can't take what we have in this country for granted and act on
And
it.
I think the China Institute should be congratulated for having a panel to discuss Chinese government policy.
If I could just jump in, I'm still confused, I don't know if maybe others here are confused as well. You know, why is it that, for example, the Japanese, because Mitchell, you're making the point, you think that this is an important technology that China needs.
Right.
You know, you love China, you want China to develop, it's a great technology that they should be adopting somehow. So, but the Chinese government, I guess, views it as a threat that somehow might undermine their authority or whatever. So why is it that other governments have chosen to see it differently? In other words, it's not crazy to think that this blockchain, Bitcoin stuff is undermining. Lots of governments, lots of Americans also think the same thing.
So
right?
the first thing that China...
Japan has decided clearly,
But
this is good, we're going to let it, we have to let it
The
happen.
first thing that China didn't like was Bitcoin was a way of taking RMB out of China,
Right,
avoiding
sure.
their capital
Okay,
control.
yeah.
Japan doesn't have capital controls.
Right.
Yen is a freely, movable
Yeah.
currency. And then look at the economies. China's growing at, what's the number, 6%, 7% a year. Japan is barely growing 1% a year.
Right.
So it needs, Japan is looking for different ways to stimulate its economy. FinTech is a very important area. And then just from a practical point of view, BitFlyer, the president of BitFlyer, who's the largest and oldest exchange in Japan, was a very good lobbyist. And he convinced politicians to legitimize Bitcoin and pass laws that legitimized it and regulated it and eliminated the consumption tax. So it was one guy and his trade association that was very successful in lobbying the Japanese government.
Also, I mean, just blockchain is such a buzzed about technology, and Japan for a long time has wanted kind of like a Japanese Silicon Valley, right? This is kind of their opportunity, and we're sort of seeing this happening in the sense that these blockchain startups, there's a lot of blockchain talent in China, as you said, and they're going to go to Japan, and Korean, if Korea cracks down, Koreans are going to go to Japan, so that's another part of it. And then there's of course the tax thing. I mean, the Japanese government can get a lot of tax off of crypto trades if it's legal, right? So, I guess one thing you could say from the government perspective, why would a government allow it, is by kind of assuming, well, we can't really stop it anyway, so we might as well attract talent, collect taxes. I mean, Japan can collect quite a lot of taxes on crypto. Also, Japan has really had a consumption problem for many, many years. They've had deflation, people aren't buying things. In theory, if Japanese people are sort of making money off of crypto and then they're buying stuff and they're going out and stimulating the economy, I mean, those are all things that could be good for Japan.
And maybe it's not random that it was invented by Satoshi.
I don't know. I mean, I saw during the blockchain week, I saw a group of people wearing T-shirt that says Satoshi could be a female.
Yeah.
How many of you actually questioned that? It is a female, so it's not a question for you. It's actually a statement for you. Yeah, it's a female.
And I'll say this a little bit. So I manage our WeChat group in China, and I see a lot of people going for just the price of the coin that they're looking at. They don't necessarily understand the technology that we're trying to build. A lot of the people in China, and I don't know this about the Japanese community in general, but in China, a lot of people are going for only the money, and because of the price fluctuation and all that, people sort of notice that and then go in with the mentality that whatever I buy, it will 10x, and I will make a lot of money. I will tell everybody about it, and so everybody gets in for that reason. That's one phenomena that I've seen a lot. People look at the money, think that it's great, I can make a lot of money, and so that's why I go.
Well, that's what started this whole craze, right? Everybody, hears that their neighbor, their friend, their cousin, bought a Bitcoin and then they made, $100,000 or $1 million. Everybody is, wants to jump on that bandwagon for greed and speculate and make money. And Chinese are I don't know, they're great speculators, they're great gamblers. They love gambling, and so this is consistent. And then it spread to Japan and Korea, who are all, Asian gamblers. I think it's going to spread to the rest of Asia. I think it's going to spread throughout the world. So that's why I'm optimistic about the long-term price of Bitcoin, because I think the world is going to jump on this bandwagon for the purposes of speculation and greed and the fear of missing out.
Okay, so we have time, we have 5 minutes, so these 3 questions are enough. So can I ask very quick questions and very quick answers, because we're really running out of time. So let's, here.
What has to happen here? Does it have to be approved by the American Banking Association? Does it require a central bank source?
Okay, that's,
FIDC
okay.
has to approve the use of Bitcoin? What has to happen?
Okay, great. Next question, or we'll take them all together.
Actually, I wanted to make 2 very short comments.
Very short, please.
Yeah. One is that even though the Bitcoin, the cryptocurrency exchanges are banned, but the blockchain technology is very vibrant. It's very booming in China. They have so many applications. Everybody's talking about applying it somewhere. So it's very hard. It's just the government doesn't want chaos. I mean, 2015 was an example that the market goes up and then crashes. So they don't want this to happen again in the Bitcoin, the cryptocurrency market. Another comment is the central government of China is very working hard on this. And they have the whole institutions working on developing electronic currency, electrical currency, all this Bitcoin currency, and they are working very hard and trying to implement it very soon.
Okay, thank you. Thank you very much. And last, yes.
Yeah, actually I have 2 quick questions. The first one is, since cryptocurrency, to bring cryptocurrency into the government regulation has a lot of benefits instead of top like the tax. What is the biggest challenge for US to bring the cryptocurrency into government's regulation?
Okay.
And the second one is, do you think the government's regulation in different countries will influence each other in some way, since investors and corporations kind of doing the shopping like in different areas to
Okay, great, thank you. So good question. So basically 3 questions here. So what has to happen in the US, like who kind of has to approve it?
Who has to approve it?
Yeah, who has to approve it? All right, let's just answer that one real quick.
Who has to approve it? Nobody has to approve it. It has to be accepted. End of story.
But as a medium of exchange, there has to be a central source, a central bank.
The whole purpose of having the decentralized anything is that we don't need a blessing from the government. They want to get involved, but we don't need it.
No outlaw if they don't approve it.
Okay.
Leave them behind.
It would be helpful if the SEC regulated ICOs. And then therefore regulate the exchange.
Also,
My broker is interested as we speak, but he says, I can't touch it. This hasn't been approved as a medium.
If it were regulated by the SEC,
Yeah.
then your
Here,
broker
in
can.
the American Banking Association.
If SEC never stepped in to start to discuss this,
Right.
we wouldn't be here to begin with. So while if we need to regulate, let's regulate it and clear, right? In a clear
But you're
language.
talking about ICOs
Yeah.
specifically, so who needs to, the question is who needs to approve ICOs? Who needs to like,
SEC.
okay, good, question answered, okay. And then you had 2 questions. Okay, so the first one was about US regulation, right? So just basically what needs to happen for the US to kind of accept it?
Yeah, you already mentioned the argument between the security tokens and utility tokens. Other from that, with all kind of challenges.
Okay, quickly, like what do you think needs to happen for the US to kind of embrace crypto, right? Is that the basic
It
question?
has to be as easy to use as Alipay.
I think, yeah, okay.
And then I think there was a second.
Yeah, there was a second question. Oh, how do the different regulations influence?
So
Yeah,
do they sort of converge eventually?
Yeah, or will they influence each other, or if so, in what kind of way? Since corporations and entrepreneurs started to like shopping around different areas too.
Yeah.
Is the biggest thing.
In my opinion, one of the 2 things will happen. One way, sort of like not converging way. I mean, some of the smaller markets that are making heck a lot of money out of this see what's going to happen in the markets like U.S., Japan that are regulated and where some of the businesses are kind of getting kicked out. Say we don't want that. Nothing will happen. So we are going to go sort of dichotomy way, or sort of like, have you heard of ISDA for the swap market? Okay, so there's a sort of international regulatory organization for the swap and derivatives market. Something like that could emerge eventually. That would influence. But right now, I mean, a big country like US could influence some other countries, but every country has its own pride, right? Every government has its own pride. Every regulatory body has its own pride. nobody's gonna say just that because US said so, we'll have to follow them. It's not gonna happen that way. So it's gonna happen in one way or another.
And a lot of the smaller countries like Gibraltar, Malta, these countries you've never even heard of, these small islands off of somewhere, and these guys are popping up because they are welcoming the exchanges, these blockchain
They see
projects.
an opportunity.
Yeah, they see these opportunities and they may become the next blockchain or country in the future if the US or Chinese don't act fast enough.
Great, well, I think on that note, if everyone has questions, I don't know, we can ask. Do you want to say something really quickly?
To this lady, you need, there is no blockchain without cryptocurrency. So you can't just encourage blockchain without having a cryptocurrency operate the blockchain.
Actually, I recently have met a fintech company that is providing market data through blockchain that is doing that exactly. I haven't exactly looked into the mechanism of how it works, but they didn't want to deal with, they are operating out of the US.
But how does blockchain run without?
I do agree with you.
Yeah, I think we have to, yeah, we can talk about this after, because maybe some people have to leave. But and this is also a very complex debate.